are not being taxed, to be specific, but they're now going to be taxed. Section 5 still, Section 5 employment income is usually one of the larger sections of that act. The proposed change, person being the owner of or operator of a digital marketplace or platform makes up or facilitates payment in respect of digital content, monetization, goods, services, or property, the amount. In simple language, there is more on the digital market space, and we are having more participants or parties in that section being brought under the tax net. And Section 12, it's about what is known as a significant economic presence tax. This is a new tax or a new section, which is on digital service tax. And so that is 12E has been repealed and replaced with a tax to be known as a significant economic presence tax, which shall be payable by a non-resident person whose income from the provision of service is derived from or accrue in Kenya through a business carried out over a digital marketplace. So this one, I think in simple language, it is capturing the operators in the digital space who are not resident in Kenya, and they will not pay tax. But now that means any non-resident person who has derived income from providing a service which is being derived from Kenya through a business will now be taxed. So still on Section 12, the significant economic presence tax, that is a very highly professional term. The proposed change will be the subsection 1 of Section 12 shall not apply to, that is in regard to that, there is a certain applications that are being excluded from here, like an unresident person who offers the service through a permanent establishment in Kenya. That is now an exemption because I think it is believed that particular person must be paying the digital service tax. And then to an income chargeable to tax under Section 9 or Section 10 of this Act. So when we read those sections, Section 9 or 10, we will see what the digital service tax is talking about. But I think in general language, it means that the people who are already paying the non-residents who are offering that service through a permanent, who have a permanent establishment in Kenya, are not going to be subject to that because I think they are already captured in the tax systems here, and probably they are paying the tax. Still on Section 12, subsection 3 provides that a person liable to pay this tax shall make a return to commissioner on or before 20th day of the month after the service was offered. So that is guiding on the dates that the return on that subsection 4 should be submitted, which I believe was being aligned to certain deadlines in the acts. Section 12G, minimum top-up tax. So this is a new section, 12G, which has been introduced, and it's affecting multinationals and focus on transfer pricing. Yeah, there are those issues on transfer pricing which are being captured here. transfer pricing is also known as profit shifting. So, proposed change here is that notwithstanding any other provision of this act, a tax to be known as minimum top-up tax shall be payable by a covered person where the combined effective tax rate for that person for a year of income is less than 15%. Yeah, that one we can still read through that. So that is the application of the minimum top-up tax. This is a new tax, again, that is being introduced, and it's called a minimum top-up tax. The rate, it's applicable by a covered person where the combined effective tax rate for that person for a year of income is less than. That is when that rate is less than 15%. Section 12H, it's about motor vehicle, and I think the idea is to capture a lot, to get more revenue from the motor vehicle world. And the section is section 12H, which has been introduced. And it says that notwithstanding any other provision of this act, a tax to be known as a motor vehicle tax shall be payable to the commissioner on each motor vehicle at the time the issuance of an insurance cover is being done. So that tax, it will be paid, I think, on if the motor vehicle is not new, it will mean on at the time the insurance cover is being renewed for that year, then that is when it's going to apply. I think this is a very direct tax, as it looks like, and so that is it. It is under section 12H, and it's newly introduced. And how is it paid? It is paid based on the value of the vehicle. There is the issue of valuation there. Probably the insurance company may require you to have your car valued, provide the value for taxation purpose. I don't know. The modalities will now maybe clarified later. Then the same section 12H proposed change. Yes, on that proposed change still, it is going to be payable, the tax will be payable at the rate specified in the third schedule to this act. So when you read that third schedule of the Income Tax Act, you will see that manner.
What I am requesting Eliud to do is that we are not accountants, all of us. So what we are requesting, don't be so neutral. I know you're a professional. What should we be saying as a body about these amendments? You know, you have really summarized the motor vehicle thing very well. You said this is a very direct tax. So is that a good thing or is it a bad thing? For us, you know, they run institutions, they own cars, they are supporting children's homes, they are supporting schools, etc. When taxes like these are introduced, how are we supposed to interpret them? That's basically what we want you to, don't just tell us about the introduced taxes, but what is the meaning and how should we, I know you are pressed for time, but also help us so that when we are drafting some, paper for the organizations, they understand where we are coming from.
Thank you very much. Thank you very much for that input. Yeah, it is true, because of pressure of time, we may tend to move a bit faster. But that is what we are seeing, and that is why we are here. And probably the best way, I do not know whether we'll have sufficient time for timing for the matters arising. What does one think? What do you think about this? Or shall I also ask here that what do you think about the motor vehicle tax? I mean, tax. So thank you. We are together with that. So what I was saying about that motor vehicle tax, of course, it's a new tax. And for all of us, we are still thinking about this thing. You see, like what I've said about motor vehicle, okay? But it's not clear about when it's going to be valued or whether it is that old value that is going to be used, yeah? So there are all those things, perhaps that we may not deliberate one by one, but there are those indicators. So they are supposed to come from us. The questions, how shall this one be done? How shall we talk about Section 12 that introduced? We said the rate is specified in the third schedule. There is a space. The tax should not based on what, but we can see the engine capacity and year of manufacture. I think now that one is more specific. So, yes, of that presentation, I think there is more of additions to the Income Tax Act about what should be taxed. Generally, that is the position. Now, it is when we are looking at the specific provisions of this act that we are now able to say, look, this is how this reducing any taxable aspects. There's more that is being brought into the tax bracket or net, like the motor vehicle tax. And we also now don't know about the advance tax, whether this one is going to replace the advance tax or not. So it is still also not clear, but because on P that it will not be done so, or it run concurrently. So this is now all our inquiries into that. It depends also on the way we understand the subject that is being, there is, because of time, there is a facilitator who is supposed to, the aspect on excise duty is very, very short. It is very short, and in case he may not make it, and VAT. So in the case he doesn't materialize or he comes later, later than we are done, then we will have the PowerPoint presentation on all of them. Yes, on all of them, which I think everybody will have the time to read through and then develop any inquiries on that. Though the time is very short, we are able to do within that time.
Let's appreciate Eliud. Let's appreciate Eliud. Eliud, thank you very much. You have at least told us what the Act and the amendments look like. And the discussion, I'm sure, is going to be very heated in terms of the questions that what we have now seen what has been introduced and what's the implication of that. So we are going to request now one of our financial analysts as well to take a very few minutes to comment in terms of what's the impact of these amendments, looking at them from a financial and economic standpoint. That is Mr. Bernard Moshere. I'm going to introduce him slightly now. And then he will be followed by our constitutional lawyer, Kibe Mongai, who is there. I'm very, very happy that Kibe, you found time to come. Kibe will be giving a constitutional and understanding of the law very briefly, so that the three perspectives will help us to now take a position, which then we will be able to disseminate to all our constituencies that are represented at this meeting. And I'm looking at the time. I'll be waiting for Sam to advise me about at what time we take the break. But at this stage, please allow me to welcome Bernard Moshere. Bernard, as you come, I'll be introducing you. Bernard is one of our most experienced financial analysts. He worked with the Treasury and the Ministry of Finance, as it used to be called. I will not disclose much more than that, because he has helped us to understand very complex things that we would not have understood what they were and the implications. So Bernard, take the least time to really run through and help us to understand the implications of all these before Kibe gives us a constitutional and legal aspect of it. Will you join me to welcome Bernard, please?
Bernard Moshere is a senior citizen. I don't know who is Joka to the other. Bishop Gitoga said he is retired. So one of us is a Joka to the other. I don't know when you are retired. I'm a certified fraud examiner. A certified fraud examiner is an anti-fraud expert. And I retired in 2018, having worked with the Treasury, or having been a public officer for over 41 years. 33 years I worked as an internal auditor. Within those 3 years, 15, I was a qualified forensic auditor. And after retirement, I went home, but God told me, why do you go home? And I gave you some knowledge. So I came from that and started doing some work, trying to analyze the public finance. I have done several petitions in Parliament concerning the budget. Even last year, I joined Mtata on the issue of the Finance Act. Even today, we have gone back. I was backing up on the expertise on that. Today, I'm going to look at what the Finance Act is, because from where I stand as a fraud expert, looking at it from the fraud perspective, it has issues, fraud issues. And therefore, to be able to, with the little time I've been given, I'll do my speech by trying to answer those questions. What is a budget? What is an appropriation bill? What is a finance act? What is the relation between an appropriation bill, stroke act, and finance act, stroke bill and act? Because a bill and then it becomes act. What are the factors affecting the bill and stroke act informing higher tax rates? Finance bill or act is revenue raising measures. It is not revenue. It is not estimate of revenue. That is the definition of public finance management. Of course, public finance management its laws, rules, estimates, the processes, and whatever. Used by public entities to mobilize revenue, allocate public funds, undertake public spending, account for funds, and audit results. The Finance Act is at the mobilization of revenue. That is the definition of a budget. You can see that is Article 220. The budget is actually on only two Articles 220 and 221. You can see a budget is estimate of revenue and expenditure. Those two, you can look, if you read that sentence there, you find there is no comma between revenue and, isn't it? What does that mean? Wale wamesoma. It means those two must go together. They are one, isn't it? Have you been given the revenue? Okay. The budget process. The budget process. As you saw the definition of public finance, it's all to do with the law. Why? Because public finance is our money, isn't it? Ni yangu, ni yako, na yule mwingine. We cannot allow anybody, including the president, to decide on what. They must be guided by law. They must be guided by law. There is nothing in the public finance. You hear people talking because people go borrowing outside the law, and that's why we have a problem. Probably with the time I will show you something small about that. Article 221 gives the guideline on budget process. Article 221. If you look at Article 221, if you read that, it says at least 2 months before end of each financial year, the Cabinet Secretary responsible for finance shall submit to the National Assembly estimates of revenue and expenditure. Estimates of revenue and expenditure. Have you ever seen an estimate of revenue? You're only seeing what? Estimate of expenditure, isn't it? And I said the Finance Act is revenue raising measures. Raising which revenue? Have you asked yourself, which revenue are we raising? They have only tabled what? Estimate of expenditure. The Constitution tells the Cabinet Secretary Treasury to table estimate of revenue and expenditure. That's the reason why when I see people analyzing Finance Act, I ask myself, you are analyzing based on what? You see?
The problem is not on your side. I am informed that the speakers are defective and they need to be fixed because a lot of people are not hearing this very important content that you are presenting. I have been requested by some that we take a small hiatus, small break, some 15 minutes? 15 minutes? Can we utilize that for tea as well? Yeah, bring your tea so that our technical people come down and fix the speaker system. We don't want anybody to float when the presentation is happening. Is that fair enough? All right. So let's take 15 minutes. This is 35 past 10:35. We take 15 minutes at 50, 10 minutes to 11. Mushere will continue with the presentation. I'm sorry about that. minutes, but this is very important. I want you to squeeze it. I want you to squeeze it so that we bring out the major things that we need to do. Okay?
That's what I wanted to ask.
15 more minutes will be good for you. So when we come back, we start at 10:50. At 10:50, we take another 15 minutes. We take another 15 minutes because we want to break into groups and we want to know what questions the groups have to discuss so that we come out with a very clear memorandum. Have you seen the